Well, the AI trade flexing some muscle today as part of its quarterly performance report. Nvidia also announcing its latest 10-for-1 stock split. Here with me now, we've got Jay Woods, Freedom Capital Markets Chief Global Strategist. Jay, great to see you in the building here.
Great to be here.
I mean, what a time to be alive. We're sitting here talking about a company that used to be the darling for crypto traders out there and a bunch of gamers. Yep. Now, it's got friends in every corner of the world here, and they just announced this 10-for-1 stock split. Does it become more appealing after an announcement like that?
Well, if you own it, and I got calls from parents and from friends I put in the stock.
Oh, yeah?
They feel like they won something. Like, hey, I've got 10 more shares.
They beat the split.
They did. This is their fifth split since 2000. First since 2021, 4-for-1 stock split. And what it means for the retail investors, it's cheaper to get in. If you own it, you're going to have 10 times more shares. The value is the same, but it does feel great when you own a stock that splits. What it also could mean, it could get added to the indexes. The Dow Jones Industrial Average is price weighted, not market cap. So maybe we saw Amazon go in after a 20-for-1 stock split, kicked out Walgreens Boots Alliance. I would be, not a conspiracy theorist. I think it's real to think maybe Intel, your time has come, 20 years in the Dow, Cisco, and Nvidia. It's more relevant, and given that, the data centers and the expansive growth we continue to see, it would be fitting to be in the Dow, and now it's more price advantageous to do so.
Yeah, one of the huge things that we think about is the bellwether that Nvidia has really been for the sentiment in the markets. How long can that be the case? It
can be the case for a long time. I mean, you have Dan Ives on the show all the time, and he talks about early innings, 1995 moment, and I happen to agree with him. Their growth trajectory, let's just put it in perspective. This quarter, they made $26 billion in revenue. In 2022, it was $27 billion. So in one quarter, they matched what was a weak year, a down year, but the growth continues to rise. 600% year-over-year net income, 500% year-over-year EPS. 5 years ago, it was a $100 billion company. Now it's $2.5 trillion. And then you look at who their customers are. They're the biggest companies in the world. The Amazon, the Alphabet, the Microsofts of the world. So their story continues to grow, and it grows exponentially. So is it early innings? I say maybe the third, but it's a stock that you need to be in because it's so central to the growing tech story that we're in now.
Jay, I'm going to play this clip for our viewers here who maybe weren't able to tune into Morning Brief when we were speaking with John Vin about his own outlook and what some of the catalysts are for the stock right now. I know you don't have an IFB. I'll break it down for you in a hot second here. Let's play this for the viewers real quick.
I think there's still very favorable risk reward on Nvidia here. We think that they can do close to $50 in earnings, and that sort of earnings power, Nvidia is trading very attractively relative to its broader peers, right? Kind of in the high teens, low 20s multiple, which is very attractive from a valuation perspective from our point of view.
All right, so John's saying $50 in earnings we could see Nvidia eventually get to. What would need to happen? What would they need to continue to get right in order to hit that mark?
Well, they're on the trajectory right now. They just have to keep doing what they're doing. They could be head-ons with Taiwan. I know people are worried if there's a conflict between China and Taiwan, and Jensen has said, and I think he said it to Julie in that great interview before, that is the epicenter of their world. So if there's a rattle there, then possibly. But no, the data center exponential growth is tremendous. Their partnership with continued partners are great. And then the competition, they may nip at their heels, but they're not really making a dent. And the Blackwell chip, he already announced that, and then the chip that's going to replace that down the road. So their innovation continues to be 1-2 steps ahead of the competition. So the multiples are justified. And that PE ratio, you go back to .com. People like to compare this to the .com bubble. Yeah. Maybe it's the beginning of a bubble, but they're the leader of the bubble. It's these AI companies that come later and IPOs that come later that will signify the bubble. They continue to lead. I think the valuation is justified, and it's going to grow for some time to come.
And so on the other side of this, there has to be outflows from other places in the market if investors are going to pile in to this crowded trade that already has been Nvidia. Where is the biggest risk, perhaps, elsewhere in the market if investors do say, you know what, this is where I'm reallocating some of my portfolio exposure
Well,
to?
What we've seen over the last 18 months is a big rotation. Yeah. If you think about Nvidia right now, it hadn't broken out to new highs. It's been kind of stagnant for the last 2 months. we had utilities lead, we had financials lead. So I continue to see a rotation. The Dow Jones Industrial Average has 25 of its members, 30 members down right now. But Nvidia is going strong. The SMH, the semiconductors are going strong. So we're seeing a rotation literally right now where they're diversifying some portfolio going into Nvidia, and then Nvidia is number 3 in the QQQs, number 3 in the S&P 500. So people own it in their indexes, and the XLK, the technology ETF, it was only 4.5% coming into today. I believe that will go up. So people will own it, but what we're seeing, this is a secular bull market. Nvidia is now leading the race again, but it goes up and it pauses, and then something else comes along. I think this is great rotation in a bull market with Nvidia being the leader.
Is it a name that you need to own outright, or that you need to perhaps have as an ETF or within a basket of other securities?
Well, if you own it outright, yes, it's a name you want to be in, but you don't have to put all of your eggs in that one basket. The SMH, the Van Eck Semiconductor Fund, is a diversified basket of chip makers. If you think Nvidia is going to lose some of that, moxie to its competition, then you buy the semiconductor index. The NASDAQ 100 has the Magnificent 7, and that's another great place to be in. And then you have smaller ETFs, not as liquid, a BOTS, BOTZ, and a Metaverse and METV that have Nvidia as one of its components and have different aspects of AI plays within them. So there are other ways to diversify and own Nvidia, but if you own the stock, hold on to it. If it grows to be too much of your portfolio as it continues to climb, then you sell it off and you buy something a little cheaper, a little safer. But for those in it, congratulations. You feel like you won with a 10-for-1 stock split.
Jay, I thought you were going to be joining me in leather jackets a la Jensen Huang, but you hit him with the seersucker today ahead of Memorial Day weekend. Jay, great to see you, man.
Have a great weekend.
Absolutely. Jay Woods, Freedom Capital Markets Chief Global Strategist, joining us here on set.